Oh, good, happy Tuesday afternoon. 23rd of August. Hi, Jay.
Hey, Andy.
Rodney, how are you?
Good. How are you?
Good. Okay, everybody, just calm down. It's okay. Just you guys kind of calm down. You're too excited today. I can tell what's going on. So I hope anybody that's going to be listening to this on replay. My name is Andy Elliott with Benchmark in the Nashville area, Rodney Wilds with F&M Bank, and Jalexander with Chapman and Rosenthal Title. And what we're talking about today, we got Jay in the center seat. He's like the man of the hour today. We're talking about title insurance and anything that if somebody comes in, they can ask questions. Even if you come later, you can post questions and we can still answer those questions even after the broadcast. So anybody got anything exciting happen this week? Nothing? I guess it's Tuesday. So last week, anything?
Not too much. My girls are back in school, so everybody's getting back into a routine.
You can start day drinking again, right? Good. And Rodney, you were saying nothing's new with you this last week?
No, I'm like Jay, had one go back to school. Actually, two. One went back to college, which is nice. Get out of my house. So,
right. Good. Well, so let's kind of dig into this. And Jay was nice enough to accept our invitation to talk about title insurance. I've been doing real estate for a decade and a half, and title insurance I know is important. I know that it is. I mean, I've dealt with it for years, but I've never really dug into what it does, what it means to people, and how it helps. And maybe if Jay has examples later of, situations where it's really paid off to have that title insurance, that'd be really interesting. So I don't know how else to start except what is title insurance?
Okay, so title insurance is basically an indemnity, an insurance policy that ensures that you are the owner of a certain piece of property. So what we do is if we get a contract refinance, we're doing a title search on that property to see who owns it, what liens may be out there existing on the property. And then in order to close on the property, we'll make sure that the owners are the ones signing the deed. We'll make sure, if there's a mortgage, it gets paid off. If there's any outstanding judgments on the property, those get paid off. And then so the title insurance, then there's two types, owners and lenders title policy. So the owner's policy then ensures the owner, they own the property. It covers things like if a document wasn't signed properly in the chain of title, if there was fraud somewhere in the chain of title, if something does not get paid off or released correctly, it covers things like that. And then the lender's title insurance, basically a similar product. It's done at the same time, but it ensures that the lender is in first lien position. So if they do wind up having to foreclose on the property, then they're in first position. They don't have to worry about anything else, hanging out there that has to be paid off before the lender gets their money back.
Got it. And is there a thing called simultaneous issue? Is that what?
That's what, yes. So the title policy, if you purchase an owner's title insurance policy, For $50, at least in our area, it may be a little different in other parts of the country. You can get a lender's title insurance policy as well. So it's not a separate title premium. It's just that $50 simultaneous issue. And while an owner's title insurance policy is optional, it's not required to purchase property to get one. If you're getting a loan on the property, any type of conventional mortgage, the lender is going to require a lender's title policy. So then that part is already having to be paid. So you only wind up having to pay the difference in order to get the owner's coverage as well.
Okay. And you said it's not required. So what kind of situations can come up where title insurance would help you?
So we're doing a title search. We're having our underwriters do a title search. We're reviewing everything in the documents. There's certain things that won't necessarily be obvious to us when we're doing a title search that could present an issue. There could be a forgery. Their prior deed may have been forged, and we're not going to recognize that. Everything could look stamped, notarized, recorded properly. There's when you're dealing with estates, there could be an heir or sibling that may have been left out, intentionally by someone, or unintentionally. And a few years down the road, you find out that there was a sibling that should have signed off on that property. So some of those things aren't, even though you do a search and you look at everything and you think 100% this is accurate, there could be stuff that is not obvious to you that might be out there. So title insurance would cover that. It also covers mistake if a payoff doesn't get sent in correctly, or a release doesn't get filed correctly, to reflect that mortgage or judgment's been paid in full. The title insurance policy would step in there. We see that a lot. Probably the most common thing we see is mortgages or loans that were paid off but just never released, or released incorrectly with the wrong book and page. And so without that title insurance policy, it would make it much harder to go and sell the property. But with that title insurance policy, it allows us to go ahead and proceed with the new transaction, because we've got that policy in place already, without having to wait necessarily for an actual release to be corrected, or getting other documentation. So that's probably the biggest thing we see is just unreleased prior mortgages and stuff.
And that's just essentially that's a clerical error. Is that right?
Correct. Yeah, that's correct. And a lot of times when you have, we see it a lot when there's times where banks have merged. So it never fails, the month or two before and after a merger, releases just don't seem to get recorded, or it goes to one department and then should get transferred over. So we see stuff like that a lot. That's probably the most common thing we see. But the other thing, and you've asked, I saw a situation where there was a mortgage on the property. It was correct. The names were correct. It was signed correctly, but the county typed the name wrong when they did an index. So if you searched for it, it wouldn't show up.
Oh.
But it was correct, 100% correct. So it was out there. And that's where title insurance kicked in, because you can't go after the county. They're a government entity, so they're immune from making a mistake. But so not that happens frequently or often, but that was one example of something. There was no way if you searched you would have seen it, because it was just searched wrong. So when you typed in the name, you'd have had to know to misspell the name, and then it would have popped up. So
how did they figure that out, or did they ever figure that out?
They did figure it out. The bank came looking for the money. That wasn't.
Oh, really?
Yes. So,
and that's where the title company stands up and
so then so then it gets all in there. But so stuff like that. I mean, while it's rare, it does happen, and so it covers. Like I said, if you've got fraudulent activity, forged documents, stuff not signed correctly, and then just errors too, because we're all human, we're all doing this. There could be an error. A searcher may just miss something
Right.
completely. And so if you've got that title insurance policy, then that's going to protect your investment in the property. Because otherwise, it's a lot. You just don't have that recourse to go back on. So
That's really, that's good to know. I know that now, is it also true that when there's a death, when it's like it's probated and all that kind of, you go through all that. I mean, title insurance really holds things together with that too, right? Because there's nobody to go back to fix things.
well, and that's yes. So we're looking at who owned it when they passed away. Did they have a will? Did they not have a will? So we're trying to piece that whole picture together to make sure the proper people that are actually vested in title are signing off on that property, because we've seen it before, and specifically in Tennessee is what the state I can speak on. There's certain rules about when a court has control over the property and when the heirs have control over the property. And sometimes, we've seen court orders saying the executor can sell the property, but really it's the heir's property that's being. So we're not just going to rely on that court order and we're going to make sure the heirs are signing off to make sure there's no issues in the future. So a lot of what we are doing on the front end before we issue that policy is to make sure everything is correct so that there's not an issue in the future. We're trying to avoid that. But if we miss something, if there was an error, or that's when the title insurance will kick in.
No kidding. And like you said, the policy is optional in some cases, right? That would be a heartbreaker to be caught in the lurch with something like that if you didn't have a policy. And there's really only just a couple of companies that generate that insurance. Like Stewart Title.
There's there's Fidelity and First American. Those are the two largest. Old Republic, Stewart's, and then we've seen a few others come along. I'm trying to think of the names. Westcor, North America. There's a few others, but primarily Fidelity, First American. Those are the two largest. And then you've got Old Republic, Stewart Title, and the others that we see also as well.
And does a person have Rodney, I feel like we're cutting you out, man. Does a person have a choice?
I'm sitting there waiting on.
Does a person have a choice on who they
take a breath so I can get a question here?
Go ahead, Rodney. It's on you.
No, go ahead.
Does a person have a choice on the title company?
So if the seller is paying for title, the seller could kind of dictate where they want the title policy and what they're willing to purchase. The buyer has every right to choose who they want to do the closing, and then it's up to who they underwrite with. So we have 3 different underwriters we work with. Chicago, First American, and Old Republic. Some people maybe only have 1 or 2 that they work with. So if you're closing with a certain place, you may not have a selection between all of them. But
so, Rodney?
I'm always confused about this optional, Jay. I don't ever see it as optional with me involved because we're doing a loan. Can you explain? And even our closing cost estimates or good faith estimates or LEs now have optional out beside of it, and I'm like, I don't see much option in this.
So the reason that word is on the loan estimate and closing disclosure is back when they were generating these 4 or 5 years ago, when they got rid of the old HUDs and came out with the closing disclosure, the federal government was trying to make it standard across the country on what these would look like. And So what they wanted is they know the lender is going to require a lender's title insurance policy. So that's got to be included on there and included as a disclosure. And the owner's title insurance it's not required by the lender to get. So it's optional. So that's why they put the word optional there, is to make it clear it's not the lender that's requiring the owner's title insurance policy. It's up to the buyers to request it, or sellers to pay for it, type thing. So that's where the optional language came from, is that it's not the lender that's requiring that to be purchased.
But the benefit of that is that without it, they're not going to have any coverage. Just the
Right.
lender.
There's no coverage. And I know in the state of Tennessee, if you decline owner's title insurance coverage, then there's a waiver form you have to sign at closing, acknowledging that you're waiving the right to purchase title insurance. So, and even if you get a loan policy, if you get a loan policy but not an owner's policy, then only the lender's covered and not you as the purchaser. And that lender's policy only really kicks in once the lender becomes the owner of the property. So only in the result of a foreclosure usually does that ever even come into play. So.
Gotcha. All right. What now when I see some of these, and this may be more about the plats and stuff like that, but where they mark, I think we did one together, and they marked the property line with a shotgun barrel. It was like this was the marker, a buried shotgun barrel for, and all of that's cool as long as it's the property description and in line with what you had before, I guess.
Yes, and no. So that brings up an interesting issue. So I'll hit two things on that. One, the one thing that is kind of a misconception that some people don't always understand or think is the title insurance normally does not include survey coverage for an owner unless they actually have a survey done. So we're ensuring that the property, you're buying it, you're getting it free and clear of any liens. The person that actually owns it is selling it to you. But without a survey, we're not, ensuring the boundary lines of that property. And then where that comes in, you're talking about the legal description of the property. And so sometimes we can close, most of the time, especially if it's a platted subdivision or the legal description is really good, we can close without having a survey done on the property. What happens is in these descriptions, if they're really old or when we map them out, they don't close up nicely, then we couldn't require a survey just in order to even close on the property. So in your case, if it was in the past, they used something called poles and they had a set measurement. So we do see that here and there. But if someone said my 19 whatever shotgun, 50 of those, there's no way of knowing how long that actually was. So we're probably going to need a new survey done to figure out exactly where those boundary lines were. And I've seen some bad ones recently where in the past, it was kind of the way they did it and it was okay. But now it would say, and then this would be the description. It would just say 5 acres bounded on the north by the Wilds property, the east by the Elliott property, the south by the Alexander property. And you'd have to just know where those were, and that's where those 5 acres were. So something like that, if we see a description like that, we're going to need to get a surveyor out there to actually say, okay, it's 100 feet this way, 500 feet that way. So we see that with surveys every now and then.
Gotcha. Y'all were talking about choice of title company. During the crash, do you remember how many title companies went out of business? Like the 06?
Right. I don't know off the top of my head how many. I know there were quite a few. and there were a few of the underwriters that went under as well. I know Lawyers Title was an underwriters, and Fidelity came in. So Fidelity is Chicago Title. They had purchased Lawyers Title, a few others, and Fidelity. So that's why it is important, I think, to go with one of the bigger underwriters. Is to make sure they've got the reserves and the cash balance there, so that if things do go bad, you do need to make a claim, they're going to have the money there to back it up and make it happen. So, yeah, I know there were at least two I know of right off the top of my head, and probably a few other underwriters, maybe smaller ones in other parts of the country, that in that market crash just ran out of basically money to back up their title policies. So it's important to have those large reserves.
Well, we sometimes require, if we know that a title company is using what I would call a substandard company in that insurance realm, that we're going to request the title policies be through, because they normally carry one of the bigger people, and we always request the policy be written through there. But if they're not carrying those bigger companies, there's probably a reason, and you may want to stay away from them.
Oh. Andy?
We lost your sound.
Sorry.
There we go.
Sorry. Had it muted. Yeah, I didn't ever think about that. That's worth the price of admission right there, is thinking about if in fact there were troubles, that the title company would be able to back you up. That's a really good point.
It's it's something you don't always think about, but I think I graduated law school in 2007 and right into the market crash and everything.
Welcome to real estate.
But it does make you kind of forget about it, but you got to remember, banks, where your money is, you got to make sure they've got the reserves, title insurance, your regular insurance, all that stuff. When things go bad, having those reserves there is what'll matter. So.
Well, that sort of reminds me of the conversation we were having about 1031s. Those guys got to be solvent as well. So
same thing.
Yep. That's really interesting.
Andy, he was interning really close to our office when he started. I remember I used to have to bring him some beanie weenies to survive on. During those first couple years.
A little can of the Vienna sausage.
Yeah.
A couple of Slim Jims to get through lunch.
Yeah, he made more money his first 3 years of being an intern with them than he did when he become a partner, I
guess. That's got to be a tough business to, like any of them. It just takes a minute to figure it out.
It's yes.
Oh man!
Especially going in when I went in. So.
Well, yeah, I got my license in 2005, and it was like I just started to figure things out, and then everybody's at the office going, "What's going on?" Because you don't know that there's bad news until like a quarter later. Hey, did you notice last quarter, like everybody's starving? Jeez. Can I ask a couple of questions, Rodney?
Oh yeah, go ahead.
Okay. Now you've covered the main types of title insurances are owner, lender, and that's it?
Yes. So that's on who is insured. And when it comes to actual policies, there are two types between those. You can have a standard title insurance policy, and then there's also what's called an enhanced title insurance policy.
Yes, I'm glad you brought that up.
Yeah, so I don't know if that's where you're leading me to, but that's where.
Well, I had it on it was on a different list and I'd forgotten.
Okay.
So what is enhanced?
So
Is it shinier? Is it more pleasant?
yes, it is. It comes with a silver. No,
Nice.
no. So basically, your standard title insurance policy. The way to think of it is, we are insuring this property as of the date of closing, the date you become the owner of the property. And that's why it covers things that all happened in the past. If there's, unreleased liens, unreleased mortgages, the fraud, all that about in the past. The enhanced coverage, it covers all of that. But then there's also some things that are more forward looking with the title policy. It does cover boundary line survey issues. There's coverage for that in the policy. And all of these, if you're looking at getting one, definitely look it up, because for me, just here talking about it, I can't go into all the details, but there's a lot of coverages, but some of the coverages do have deductibles or policy limits on them, but it does cover a broad variety of things. So if there's restrictive covenant violations, boundary line disputes, encroachments, it also increases in value over the course. Your title policy, when you buy it, the coverage amount, the face value of the policy is the purchase price. And then with the enhanced policy, it has the ability to increase up to 150% of the face value of the policy every year. Or, I'm sorry, 10% every year over the first 5 years, up to 150% in value of the original policy. So if you do get 2-3 years down the road and there's a big claim on the property and the value's gone up, then that gives you that extra coverage instead of being limited to what the original value was.
So an enhanced policy in an ascending market like what we've had would be
yes, because it's going to grow up to that limit, but it's going to grow in value with the value of the house, the value of the property. So
is it significantly, if it's enhanced? I'm sure the price is enhanced too.
It's right at, yes. It's I think it's 20%, 15 or 20% more than a standard title insurance policy. So basically, you add that to the cost, and that's the difference. But you do get all those extra coverages. I've got a list. So like if you find out you do have a lack of vehicular or pedestrian access to the property, it would cover stuff like that. It covers building permit violations, unrecorded easements.
Covers no sidewalks? Is that what you were saying, basically?
Yeah. And forced removal. So if the property extends onto another property line, it can cover the actual removal of that. And again, like I said, there are certain deductibles and policy limits built into all those items, but yes, it covers. So there's a wide variety of stuff it covers. I think, one of the biggest things is the increase in value. But then when you get all these extra coverages, you may not need any of them, but if you need one of them, then it could be very valuable to have had.
Huh.
When would you recommend for a buyer? When would you say, "Hey, Rodney, you sent me this over, but I think this guy's a good candidate for that optional policy"? Because I normally don't. I see it occasionally. I think I've had a couple people request it, but outside of that, I really haven't had a lot of requests for that.
It's interesting, and I feel like it comes and goes in waves. Well, all of a sudden, I'll get a few pockets here and there of people requesting it, and then we won't see it very often. I haven't had too many people request or issue one lately. It does have to be for primary residences. It can't be for investment property. And there are certain limits. If it's over so many acres, I believe 25 acres, you can't get an enhanced policy. So, I mean, anybody that's purchasing for their primary residence could benefit from having an enhanced policy. the problem you always get down to is that who's going to pay for it, and a lot of times people don't want to pay anything more than they have to at closing. But
That's significant.
yeah, so
It seems like though, if I was some of those coverages, if I was buying a piece of property, maybe from a family member, and worried about property lines and that sort of thing, that would be something I'd consider. Because seemed like that was some of the coverages in there that maybe
right,
not in the regular policy.
right, they wouldn't be in a regular one. Yes, so
Hmm. That was really good. That was really good. Rodney, anything else?
No, that's it.
I
That's
don't want to.
of course he's. What do you mean? He's done a great job explaining it. You know, I always get a lot of questions. I was like, well, I don't need that, and I'm like, well, you don't need it until you do,
Right.
right,
But I've seen it come up a couple times, and it's I don't remember the last time I seen it, but I do remember somebody tried to sell somebody's property when they were out of the country or something, and it didn't. And that person was able to reclaim that, obviously over fraud,
right. And the other thing, one thing to kind of keep in mind too is, I know the markets are always different. In our market, specifically in the past, it was a seller paid, kind of almost automatic seller pay for title insurance.
Yeah.
And then that shifted over the last few years. But if you have an owner's title insurance policy, and now you're going to sell the property within 10 years, and you're now in a position where you're having to pay for it, there is reissue credit, and it saves about 30% off the new policy. So it's a benefit. So if you do get it or do have it, then you do have that benefit to get that credit in the future when you go to sell it.
So I have one question, and if it doesn't make sense, that just goes to prove that I don't know about these things. But when we're talking about title insurance, how does that relate to the deed and a warranty deed, and what's the connection there? Because when I hear title insurance, the title of what? Is it the deed that you're talking
it's
about?
the deed. Yes. So that deed, which is typically a warranty deed from the seller to the buyer, is the seller is warranting to the buyer that they are the owner of the property, and I am conveying it to you, and I have the right to do that. And so the title insurance then basically is a policy that backs that up, that seller is the owner and selling you that property and selling it to you free and clear of mortgages, judgments, liens, that kind of thing.
And if there were complication, is that what they call a clouded title?
Yes. So if we're doing a search, and I don't know, for example, we saw somebody died 5 years ago, and there were two people that signed the new deed conveying the property away, and when we're doing a search, we find an obituary, and there were 3 or 4 children. And so now all of a sudden that would be a cloud on title, because now there's 2 people out there that we think probably should have participated in that prior transaction that didn't, or if there's an unreleased mortgage or fraudulent, all those would be considered clouds on title, things that when we get that title search report back from our title search show as issues, we have requirements that we have to satisfy. So we have to make sure everybody's signing, everything gets paid off. So
that's interesting. I think the bottom line, what I'm taking away from this, the enhanced is particularly a particular interest, and about the property lines. I mean, that's significant, but I guess the bottom line for me on title insurance is it stands in the breach of a big loss. The potential of a loss is hundreds of thousands of dollars, and that's what you're protected against, right?
Right.
God.
Right. So, yeah.
Jeez. That's really good. Rodney, do you got any other questions for Mr. J?
No, that's it. I appreciate him answering my questions here. It's we for us as a mortgage company, it's it's really important to us for our buyers to get a for us having been through several cycles, real estate cycles, ups and downs, seeing these title companies or the insurance underwriters go out of business. That's just why we have our policies in place, that if we start seeing a title company delivering some you know Rodney Wilds insurance policy, and we're like, well, we're not so sure Rodney's going to be around for long enough. We just, politely ask them when we send the closing there, and we put it in our notes to give us a good title insurance company. So we try to look out for our clients like that. So it's for a buyer. I would ask the same thing. Make sure you use a reputable title company that uses a good policy person.
That makes total. That's to be candid. That's not something I've given a lot of thought about, and that's why I thought having Jay on to explain that today would be such a good thing. What a great addition in terms of a video to the collection. I can't thank enough. Jay, thank you. I think our time's about done, but Jay, thank you very much for taking some time with us today.
Thanks, Andy.
Rodney, I'm sorry if I was a little bit long-winded in the beginning. I'll try to learn from visual. You got to give me a visual cue, like something.
Yeah, you're the boss of the show, so you just kick me off anytime you want.
You need to stop that. I am not. Listen, you guys are great. Rodney, thank you very much as always for doing this with me every Tuesday. And Jay, you're always welcome. If you're ever watching and want to chime in, you know how to do it. You got the link. So thank you both very much. Have a good week.
Thanks, Andy.
All right. Thanks, Andy. See you guys. Thanks, Jay.